Hi everyone, today we ended up dipping a little bit lower, broke this level here, but we retraced all of that into that same consolidation range we saw after hours yesterday and in the pre-market this morning. So far so good on a potential consolidation low. You like to see this big wick to new lows and quickly retrace back into the consolidation just at the level here, 574.71. But let's do a quick recap of markets as we head into the weekend. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So markets were resilient today. We had Fed Powell saying they are waiting for greater clarity on Trump policies before they make the next move on rates. Basically saying they're going to continue to pause, waiting to see what happens. And we got the unemployment data today stepping a little bit higher than expectations. And markets didn't care about any of that. So we're not getting rate cuts. We're getting a worse jobs data. And like I said, markets were resilient during this session. So overall, pretty good. And you can see here the White House is saying they are implementing significant changes on trade, immigration, fiscal policy, regulation. So all of these things are uncertainties, and the Fed is wanting to wait until we have a little bit more before they start to make decisions this year. We're still expecting one, maybe two cuts, but that seems to be pushed out further than we thought initially. Speaking of unemployment data, looking at the calendar here, you can see non-farms worse than expectation, not by a lot, but a little, but the unemployment rate ticking back to 4.1 from 4. Still full employment, but if this starts to trend, if we see it step back up to 4.2, that's going to be a major indicator, but for now, we got to step up. Markets didn't care a whole lot. Eurozone GDP a little better than expectation. And that'll wrap it up for the week. I thought markets would react to this a little bit more strongly, but they didn't care at all. Moving over to the charts here, looking at the S&Ps, you can see we had the 200. We expected to hit the 200, and we did. We overthrew it really strongly, almost hitting that next level, 560, 516. Came up just a little bit short of that, but we hit that 200, pushed back through 569.90, and then back through 574.70. So now we're back in this range here, 574 up to that 579 area. We're back into this kind of consolidation low here. Momentum stepping back to bullish. You got a kind of consolidation on RSI. 200 seems to be your support, which is a little bit further away from current price than I would have wanted to see if you're trying to take a trade here at the end of the session. But if you bought in, I do understand why. We're definitely extended. Seems like we're finding a little bit of support. And like I talked about on the intro here, you can see that big wick low, consolidation range, back into that range, right into the level. This is telling me that buyers are coming in, even with bad data, even with not great comments. Markets are starting to find a little bit of support. Moving over to the Tasty charts, we did not quite get back into bullish conditions, but you can see we're in the middle of the range here. Your trailing stop is still 578.47. Got really close to that early in the session and then rejected into these lows here, but mid-range. Want to see it hold above the 8 at 574.42. That's pretty much right where we're at. We're above it by just about 20 cents or so. Want to see it hold that level and push through, get back into bullish conditions. We haven't seen that for a little bit now, but again, looks like a bit of a consolidation. We're in the same price area that we were in back here on the 4th, and we are still here now on the 7th. So we've had some waves, definitely interesting, but we're in the same price action, want to see it hold here and maybe start to get a little bit of a flip. Moving over to the NASDAQ, it doesn't look as strong, but same thesis here. You can see we pushed through the trend here, pushed through that 200, closed below it yesterday, and then we went much lower. 481.94 was the level, touched that level, bounced really strongly here. You can see it on the hourly chart, came right there, closed right at the level, next hour through another wick, and then continued higher immediately, all the way back into that 492 range. So the range now is 486.84 up to 492. If it can break here and push, I think we could see 498.44 potentially in play back where we were just a couple of days ago. Could put us back above the 200 as well. That's currently at 491.89. We closed just barely below it. Want to see it get back above there and push at least for a short-term retrace. Still expecting this to be a more medium-term downtrend, but in the short term, I think we're going to get at least a relief rally. Moving over to the Qs here, you can see same thesis, hit that lowest ATR band, pulled back into this consolidation range, middle of the range. Didn't quite get to the trailing stop early, but that's sitting at 494.77 right now. Want to see it break that and get into bullish conditions for the Monday if we're going to get a little bit of a retrace. So far, this is a pretty consistent downtrend, and really that didn't break today, but the big wick low back into the consolidation does give me at least a little bit of confidence for hopefully a Monday push. Moving over to the Russell and the Dow, the Russell went right to that next level, 201.88, touched that level just briefly. The low was 201.73, so touched the level, bounced back into the range that we've been in, same as everything else. You can see volume, pretty good volume on the day. On that reversal candle, Dow, similar thesis, went to a new relative low and then pushed back into the range. So buyers coming in pretty much across the board, exactly what you would like to see as we get closer to what I think is going to be at least a little bit of a relief rally. Once we get the rejection off of that relief rally, then it's going to be pretty terrible in my opinion. But for now, we're extended, pretty much unchanged within the last 4 days. Moving over to Apple and Microsoft. Apple had a good day, 1.59% to the upside, stepped to bullish on momentum. Apple continues to be extremely resilient, still holding well above that 200. Continues to hold in this consolidation range here at the EMAs and SMAs all in the same range, except for that really long-term 200 down there. Overall looks good. Want to see it get back above 241.83 if it's going to do it. Multiple tests to 230, push back above 237 today, so 241 is your next target. And then looking at Microsoft, still down about 1% today, so not as good as everything else. Microsoft has looked pretty terrible for a while. You can see the high was back here at 450. We've given all of those gains back and then some. Looking for their trend touch at some point down here around the 370 area. Then we'll see what happens from there. But either way, same consolidation range, and it was negative relative to everything else. So weak for relative strength. Moving over to Tesla and NVIDIA, you can see Tesla was down about 1/3%. Pretty good compared to what we've been seeing from Tesla. Structurally still looks terrible. The level is 255.44, so we touched that level. That's where we expected to go after the close yesterday. So we got the touch, we got a little bit of a bounce. And then looking at NVIDIA, positive on the day, 1.92%. Got back above the trend here. That's what you like to see. You want to see this push back to 116. I was hoping for the 106 touch. We didn't quite get it, but we did get a little bit of a reversal. Seems like NVIDIA is potentially going to hold in this area. Still, again, maybe we get one more wick to the level touch and then we get the bounce, but for now it looks okay. Moving over to Meta and Broadcom. Meta had a really big wick down to that 602.95 level. That was the target to the downside. We touched the level and then bounced, finishing down only 1/3%. Really, really strong bounce. Again, big buying area there. Fully round trip this move. It looks a lot better today after that touch. Still bearish across the board on indicators, but definitely some buyers in that area, 602.95. And then you can see Broadcom, they had good earnings, bounced 8.64% off of the key level there, 184.81 was the level. You can see it was the consolidation high here. Came back, touched the level, and bounced. Moving over to staples and discretionaries, you got staples bouncing a little bit more, 1/3% there, and then discretionaries negative on the day. We got the 200 touch. We overthrew the 200 to my level, 200.53. You can see the low of day was 227 cents, so we just touched that level very briefly and bounced. So again, buyers coming in that range. Let's go ahead and extend this out. Just below the 200 at the key level. Want to see it hold this zone and bounce. Looking for that retracement. And then, like I said, staples, very, very clean. Hit the 83.43 level after the break yesterday, so I could see the take profit there. If we can get above that level, then you're looking for 84.53. Either way, still looks strong. Good volume on the day as well. Moving over to 20 and 50-day breadth. Nice bounce on breadth. Again, indicating that there is some strength in markets after the level we touched here. We'd had consolidation, but we finally got a nice little bounce on breadth. 50-day pushing back into the lows of this consolidation range. Everything looks like we could get a little bit more follow through to the upside after we held that 40 level touch for 4 days, and now we got a bounce. So breadth confirming a potential short-term relief rally in my opinion. Moving over to the dollar through wicks to the key level, 103.64 was the level. We hit that trend yesterday, overthrew the trend today to the level, found some support in here. You can see double bottom in there through big wicks, found a nice little rally out to the trend. If we can get through there, maybe the dollar shows a little bit of strength, but for now, it continues to look pretty terrible, but we did find some support at that level. Moving over to the VIX through wicks to that trend line again. You can see same consolidation of trend lines through some trend, through a wick to that level, and then rejected from there. Again, another potential resistance area. If the VIX is pulling back from this zone, then perhaps that is going to give markets a little bit of strength in the short term. So zone of resistance, waiting to see this reject lower back into the 20 range, potentially as low as that 1750 area in my opinion. Moving over to my accounts, I ended up net positive about $270 or so on the day. So pretty good trading, especially with the big intraday reversal. Again, those can catch me off guard. I usually like to lean into the direction that markets are moving. And then we had a big reversal and I was able to adjust to that with a pretty good bullish trade there. And you can see made some money, have some puts on for the Monday. 482 and 483 is what I sold for $2.30 credit. So looking to collect all of that for the Monday. If it continues to look bullish above that 492 level, then I'll probably get into a more bullish trade. But for now, still playing it a little bit safe because we could absolutely see it push to lows again, but overall, I still think we have a pretty solid base in this zone, looking for a little bit of a rally on the Monday. Let me know down in the comments section what you thought of FedPal's comments and the unemployment data. Should markets have gone lower? What do you think since we didn't? Otherwise, like and subscribe if you got any value out of this video. Make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.